Now, what if I told you there was one major difference that separates the crypto millionaire investors from the rest of us? And if I told you what it was, you'd want to double down and focus on improving that area, wouldn't you? Well, that major difference is actually selling, and it takes a lot more effort than just clicking the sell button, for example. It takes a very solid plan and a little bit of effort to apply. But here's the good news. You have just stumbled across that plan, because in today's video, I'm going to show you exactly what the multi-millionaire crypto investor exit strategies look like for a 2025 alt season. Imagine it's February 2026 and altcoins are rushing up faster than you can say alt season, and Bitcoin is now over 200,000 US dollars. You fall into a routine of refreshing your portfolio, then eating a bowl of cereal each morning, but then there becomes a bit of a problem. One day you wake up excited to refresh your portfolio and eat that bowl of Fruit Loops when sweat starts dripping down your face and your world starts to close in before your eyes. Your portfolio's just dropped 20% overnight and then even 30% more come lunchtime. And you're now scrambling to figure out what you're going to do. Sell, hold, buy more. You're just confused. And then you remind yourself about that no BS crypto video you should have paid more attention to back in June 2025. The fatal flaw your future self made in that example was not having a sell plan and not seeing any of the warning signs. All I ask for your future self's benefit is you watch this video and give yourself the chance to learn what I'm about to tell you in this video, and at worst possible case, you're going to leave this with so much more information than you came into it, and at best, you have a complete sell plan in place just like any crypto millionaire would. There is a 6-step framework I'm going to show you in this video with a bonus 7th at the very end. But first, a very important question. If you're someone worried about your altcoins right now, okay, and you regret buying them or want to know when you can sell these altcoins and move that money into the better coins, well, do not worry. I'm going to show you exactly what to do in this situation and when the window to sell is likely going to be open, and that will be available in step 4. But first, let's look at step 1. That is monitor overbought indicators. Indicators are very important, and if you do everything I mentioned in the future steps perfectly, it really doesn't matter, because if these indicators I'm going to show you right now say, hey, we're going to have a big pullback any minute now, okay, it doesn't matter what altcoins are doing, the market will come down. So it's important you have these in place first and foremost, and you bookmark some of these. Now, of course, in the top section here, this is Bitcoin's price. I'm going to show you some of the ones that I think are very important and ones that you can access for free somewhere online. And these are all very easy to understand. So this here, first of all, is the Fear and Greed Index. Now, I'm on a monthly time frame, so it's important to be on the monthly time frame, I believe, because if you go weekly or daily, these chops look a lot more hectic. We want to kind of scale it back down to a longer time frame, because you can see here, back in the previous cycle, okay, we were extreme greed for quite some time. As a matter of fact, we were still greed over here and started to come down, whilst the market still continues to go up. So of course, you don't want to just use this indicator by itself. It is very useful though. The 2 times in this bull run, we've just entered the green zone on the monthly, was actually the top here and the top here. So we know it works based on this bull run. It's very important, because if you look at the overall sentiment of the market, if everyone's calling for Bitcoin to go up another 2 more X, again, that is a warning sign right there. That's what this chart looks at. This next chart isn't one I created. It's one that I actually found online, so I'll leave links to it down below. It takes the realized price of Bitcoin, which means it takes the average buy-in price for Bitcoin for all of the holders throughout history, and looks at optimizing that and changing it based on volume, okay? It takes the VWAP into consideration. So all you really have to know is it's really good at timing the rough highs, you can see here, of Bitcoin. Okay, particularly Bitcoin's important to look at, because if Bitcoin starts to fall down, alts will follow it, okay? And so you can see here again, we haven't actually been at this kind of like topping point, which is a score of 70 over here. So at that point, I will be a little bit more concerned. This is showing actually bearish divergence, you can see here. So it is something for us to keep in mind. If we do break up, you damn well bet a score of 70 is a point in time you want to be a little bit cautious of. Now, this chart behind me is what's called the MVRV, or market value to realized value, which essentially is kind of like the chart I showed you before. It looks at, are people in significant profit or in a loss for Bitcoin? Okay, so you can see here in this dark red zone, that is significant profit, and we typically do see a blow-off moment like this happen in every single cycle top. So just like the two previous indicators, I'll be using this to eye off, because again, if people are in significant profits, okay, they're likely going to want to take profits. And we haven't even entered the dark red, or even orange zone just yet. So I think we do have a lot to still go. And last but not least, we have the RSI, so Relative Strength Index. You can pull it up for free on TradingView. We have overbought and oversold. So really, you want to buy in green and sell in red, particularly sell above a score of 70 here, and particularly buy beneath a score of 30. Now, more particularly, what I'm going to be using the RSI for here is if we zoom into the current price, you can actually see something very important. We have a bearish divergence. So we see here, Bitcoin put in a high and it put in a higher high, whereas on the RSI, what happened is we put in a high here and a lower high, which means that momentum is running out of steam. Buyers are being exhausted. Now, if we come and look at the previous all-time high, okay, the same thing happened. We had a high over here, a higher high here, which is fine, but then we actually had a high here and a lower high here. So again, buyer exhaustion. Now, this could possibly come up again as we begin to inch higher, and in combination with multiple of these tools is a dead giveaway. We're going to have a reversal very soon. I want to quickly mention as well, the Bitcoin cycle clock will be invaluable at that point in time. It's got no problem signaling to us, hey, the market's overheated, you probably want to take some profit, like it's been doing a fantastic job of doing here in red and dark red, and even I think a better job at timing the bottoms here in green. Now, the Bitcoin cycle clock takes 16 on-chain and off-chain indicators you can see over here, and pretty much spits out one score in the bottom right-hand corner to tell us if Bitcoin is overvalued or undervalued. Now, this is finally almost available. In the next few days, we are going to be launching this. I'm so excited. It's been a very long time. So if you want to get your hands on it, it's going to be a subscription basis, very affordable. It will be available for those in the private community. Step 1, complete. Again, the rest of the steps will definitely go into a great sell plan, but if this one screams the market's about to crash, then the rest of this don't really matter. Number 2 is create sell levels, so what I call hard stops. And simply, they're just sell levels that you put in place now based on a realistic forecast of where the coin can go. These are levels you would put in place now, where no matter how high the coin goes, manually the coin is sold at those levels. So this is why I tell you guys a few times, like, it's very important you keep to a manageable amount of coins, usually no more than 15 coins for most people, because trying to do this will be a headache for 50 coins, especially if you try to manage all of it as well. So really, to boil it down, you just set in manual sell levels. To keep it nice and simple, in the bull run cheat sheet we have here, I've got a whole bunch of these different sell plans automatically created for you guys based on 3 inputs you can put in: your average buy price, your average sell price, and the number of coins you own. With that information put in, you can pick any of the sell levels that are catered towards you. Now, again, in this example here with Solana, okay, I've actually done this with the goal of achieving an average sell price of $150. This gives us our sell levels. So we just punch this into Binance, Coinbase, Kraken, whatever, with the amount of our portfolio we're selling at these different levels. And again, it's going to put us at an average sell price of our target of $150. Now, look, I totally understand you might not want to come and join the private community to use some of these tools. So if you were someone who wanted to do this by yourself, I want to give you 3 very important tips in mistakes that people often make when they're doing this themselves that I think are going to cost them a lot of money. The first one here is weighted average price. And what this means is when you actually go to do these sell levels yourself, depending on how much of your portfolio, so percentage, you actually sell at these different levels, it will change your average sell price. So for example, if I got rid of like these middle sell levels here, for example, and I had decided to sell at sell level 1, 90% of my portfolio and 10% of my portfolio at sell level 5, obviously, for a lot of you know this, but my average sell price isn't going to be in the middle here, nice and even. Because I've sold most of my portfolio down here, what's going to happen is I'm going to have my average sell price end up being far more close to sell level 1, which means if you're like me in this example, aiming for an average sell price of $150, so right in the middle, Of course, you're going to be pretty upset with yourself at the end of the bull run going, where did all that money go? Because, again, you overcommitted too low. Now, this is pretty easy to explain when we only have 2 sell levels to add in here. But when we're like adding in 5 sell levels, like you can see here, or 10 sell levels, people can get confused very quickly. There is an equation you can actually do here, but to keep it simple for this video, if you want to do this by yourself, just look up how to calculate weighted averages when it comes to stocks or crypto. The second tip here is something called risk. Now, risk is a percentage you sell above or below the average sell price. Now, what this means is, again, remember, our average sell price we're aiming for is $150. Now, in this example, at sell level 3, we're actually looking to sell Solana at $150, which means this sell level right here is $150. Now, if you can think about it like this, every dollar you are selling above $150, you're adding additional risk. The reason being is because, of course, the coin could reverse at any moment. But also, if you think about it, if you're trying to sell like way up here as your last sell level, let's say $200, you're probably better off just selling everything at $150. So ignoring the bottom sell levels and the above sell levels, again, and just selling 100% all in one go, because the risk up here is like far too great. The rule of thumb I use is I don't like selling any higher than 10% above the average sell price of $150 in this example. Okay, so the last sell level we have here for Solana, okay, is $165. That's 10% risk above. And so for below, we actually want to sell as low as we possibly can, because that, of course, means we can just sell lower and get out quicker, okay? So in this case, we begin selling here at minus 25% risk, which is quite good, at $112. This is where my third and final tip comes in, and that's your CB return, or your cost basis return. Now, to cut a long story short, essentially, as I mentioned briefly there, we're looking at making money in crypto. It's all about profit, okay? We don't want to just make our $2,000 back, the money we put in, which is our cost basis. What we want to do is make some money. That's your profit, okay? So what I aim to do is get at least 33% of the cost basis, so the money I've put in, back as profit by sell level 2. Now, sell level 2 is minus 10% risk, so we're selling here at $135. And so in this case, we're actually making a really nice 63% cost basis return, which means at sell level 2, we're getting our $2,000 back. That's our cost basis, plus the profit is $1,200. So we're getting plus $1,262. So what that means is by sell level 2, we'll have in our back pocket $3,262. So again, a profit of $1,200, which is about 63% of our cost basis. So that's my general rule of thumb. If you can make sure you get out within reasonable risk on the low side and the high side, and get back at least 33% of the money you put in as profit by sell level 2, you're in a pretty good position. Now, you can see a lot of these rules are actually mentioned here in our exit sheet itself, because fundamentally, we want you guys to exit carefully and with a lot of profit. Step 3 is adding in a trailing stop loss for the last few sell levels only, either manually or automatically. I'm not going to spend too much time talking about the trailing stop loss idea. It's not a very common and spoken about method. In my opinion, it makes sense for me. That's why I'm sharing it with you, because I will be using this method. But one, it's not available on a lot of exchanges, only a select few, which means you might have to do this manually, which is very tedious for a complete crypto beginner. And that's my last point. It is pretty tedious. So I would highly encourage you to learn about this before going ahead and implementing this. I think most importantly, guys, skip this step if you are a complete beginner. To cut a long story short, you may want to keep your existing 5 sell levels like we explained before on your Solana. Okay, same thing, except you might be able to add in 1, 2, or 3 of these things called trailing stop losses, like you can see in this example here. In essence, a trailing stop loss is an invisible line, like you can see here in white, that follows price in green by a certain percentage. Now, this percentage, there's a fancy word for it. It's called the delta, okay? Now, the delta is, again, that percentage that you actually set on the exchange that says, if price falls by this percentage, I want you to sell my position. So it's a little bit different to these sell levels where when price goes up, okay, and touches that sell level, it'll take you out of the trade. So what actually happens here is that this invisible line will follow, okay, but what it'll do is it'll stall when price starts to retrace from that latest 10% difference level. Okay, so it's 10% difference here, but if it starts to close down, obviously the gap starts to close. Maybe it's 9% here. Maybe here it's like 6%. But when price goes back above that previous high, so if price goes back above this point, it's now 10% again, and if it keeps going up, it's going to follow. Now, again, we're 10% here, but if price comes down, it's going to stall. And it'll do this until price falls to that 10% marker, or you might set 20% or whatever you decide to set. But if it falls by that percentage, it will sell you out of that position. It allows us to capture some of that huge price momentum altcoins can have. Now, step 4 is selling losing altcoins in wave 1. What I mean by this is some of the coins that you're down on right now that you've got a lot of worries about, or coins that just are underperforming objectively, if you want to get rid of these coins and look to position yourself into the stronger coins that people are talking about or buzzed about, or you just have more conviction in, this is where you do it. And it all revolves around this chart behind me. It very much so is the cheat sheet, in my opinion, to profit taking in this bull run. The red and yellow zones you can see back here and over here, these are actually altcoin season. This is a good thing. The blue zone is more Bitcoin season, which we are pretty much towards the end of right now, which is why I'm quite bullish on altcoins in the short term here. But what happens immediately after we break out of this blue zone, okay, here, here, and here, is wave 1, is this point in time right here. Now, this is altcoins' first bullish push. This is what we're about to experience, I believe. And this is the time you need to look to clear some of those losing positions and reshuffle into wave 2, which I'll mention in a second here, which is buying the stronger coins. Now, wave 1 is very obvious in my opinion, because what it does is it clears previous B high. Like I showed you on this chart here, in bearish conditions like right now, we have a 3-wave corrective pattern. We have A, B, and C wave. Okay, so this B wave in the middle here that occurs, right? So this is B wave back over here, and this is B wave here. Okay, what typically happens is this wave we're about to experience, I believe, will likely see us clear the highs of the B wave. So we'll know at that point in time, okay, the first bullish wave for altcoins is about to topple over like it did over here, okay, clearing the B wave, which means that we're about to go into wave 2. If we have a look at Ethereum in the previous cycle, right, this is that sort of first impulse wave here. And you can see from the point of the end of the impulse wave, it was actually higher than the high in the bear market. All right. So what I'm saying here is that we ended up here, and this was the high in the whole bear market. Cardano is a good example of this as well. This was the high in the bear market, and we closed here higher than that. Actually, we technically closed right on that, okay, which is fine. But if you look at a coin like Beam that's really struggling right now, you've got to look at these coins in this wave 1 and go, where are we? Ideally, Beam would be back up to these levels. That's what we'd be eyeing off here. But if Beam is somewhere around this yellow zone, that's okay as well. This is where step 5 will actually come in handy, and that's selling everything in wave 3, because wave 5 may never come. So what I mean by this is that after we have our bullish first wave breaking out of the bearish trend that we're in right now, there's going to be a pullback. There's going to be a corrective wave. As a matter of fact, this is very, very healthy. But in this wave, what you want to be doing is, again, taking profit on these weak coins and looking to buy the stronger coins for the next push, which is wave 3. Now, wave 3 here usually is the biggest wave out of all of them. It's the biggest and strongest altcoin push, which is where we have a next massive push to all-time highs for altcoins, and also for this chart here. You can see this point in time clears the previous all-time highs. Wave 3 normally is the largest push and could look something like this. Okay, we've come down and we've blasted up again. This is where you want to be taking advantage of your large caps. You can see Cardano here in the previous cycle went up about a 16x at that given point in time. Now, in step 5 here, I mentioned selling everything in wave 3. And the reason why is because wave 4, if this wave 4 comes, it could be much more powerful than what we may think, which means if it is, and it actually pulls us into a bear market, I'd much rather look to have all of my positions out. So you kind of want to use some of these trailing stop losses or against some of these like more hard cap sell levels here, and likely have them already be hit at this point in time. If it hasn't been hit by sell level 3 and we start to see the corrective behaviors of wave 4, then you probably should just look to take some manual profits out, in my opinion, because again, wave 4 is coming, and wave 4 is corrective. We usually see wave 4 here fall 50% of wave 3 or under the previous all-time high. So again, what this looks like here is pulling back down beneath the previous all-time high. So again, for us, it may look something like this. We've now fallen back down into wave 4 here beneath that point in time, or even lower, but we definitely can't fall lower than the top of wave 1. If we fall lower than top of wave 1 like this, okay, this would actually, in my opinion, invalidate all of this and essentially mean we may never have a wave 5. Now, wave 5 is the last and final push of all of this, and this is where we normally see the smaller cap coins have their massive blow-off moments. You can see here Cardano from this point in time only went up about a 2.5x, whereas again, back over here, it went up roughly like a 15, 16x. This is Cardano's chart. Let me summarize everything I just showed you guys because I know it's a lot to digest. I'd highly recommend rewinding the video, as a matter of fact, to like let it sink in because it is very, very important in my opinion. So essentially here in wave 1, the goal is for us to break even from the bear market highs. So again, for a coin like Beam, for example, that would be the price on Beam here going up and actually going back up to these levels. So that's in wave 1. Wave 2 will see a bit of a correction, of course, but then wave 3 will be a great sort of stepping stone here to see that huge growth. So that happened with Cardano. Then we saw, you can see wave 2 have that bit of a dip, followed by wave 3 went up like that 16x. Wave 4 was a slight correction, and then wave 5 was very, very weak, definitely compared to wave 3. Alternatively, we can look at a different coin, which is Chainlink here, and we can see Chainlink had a bit of a different, this was a bit of an outlier, a bit of a different story. It had a very, very strong wave 1. It actually pumped up here like a 10x or 11x before wave 1 even happened. It had a slump in wave 2, and then it went up pretty weak in wave 3, only up about a 4.5x, and then actually pretty much had a horrible wave 5. From the open to the close of wave 5, it pretty much broke even. So the reason for this is actually because of the next step, right? The last final one, or the main one, which is sell narrative pumps. So what happened with Chainlink is it was a DeFi considered coin back over here. It had its DeFi narrative pump throughout this whole entire period. So you must also assess the narratives. And why this is important is because narratives happen at different times. So the DeFi coin Uniswap actually had its all-time high in the previous bull run on the 26th of April, back over here. Whereas Mana, so Decentraland, had its all-time high in November of 2021, so 210 days later. So different narratives will also pump at different times. So in conjunction with all of this, we have to consider that different coins will pump here and some different coins will pump over here. So we have to simultaneously just have a look in terms of where money is flowing. This is what I call the narratives, right? So narratives are just simply sentiment. Here's a different comparison on the same chart for you here again. So I know that might be confusing. The last part kind of just blurred all together. All I'm trying to say is when you see NVIDIA and it has an earnings report, for example, and everyone's buzzed about AI coins and AI coins are pumping up much more than other coins in the market, and let's say it's wave 3, for example, we can kind of go out on a limb here and say, well, it's wave 3, again, based on those characteristics, it's also the AI pump. Let's take a wild guess here and say if our sell levels aren't hit sometime in the next period, we probably should look to just take some money off the table, even if our hard cap levels haven't been hit. Alternatively, if it is wave 3 and it isn't the narrative pump yet and the coin is underperforming, we may have a saving grace in an upcoming wave, so wave 5. But like I said, you don't really want to be risking everything for wave 5. I think having everything off the table in wave 3 and then looking to use wave 5 as the final hurrah with the money you've made in wave 3, that's probably a much better decision, even if the money you've made in wave 3 maybe isn't that much. Maybe you've 2x'd overall, okay? So you haven't made that much money. But again, wave 5 might yield huge returns. It's better to take profit and make money than risk it all on wave 5. Step 7 is the most important one of all, in my opinion, and that is do not get greedy. Now that, I know you're thinking, obviously, Kyron, trust me when I say those who've been in a bull run before know the feeling. It is complete and utter euphoria. It's 10 times more powerful than the panic and the worry you've been feeling recently with all the craziness around the world. It's amplified in greed, okay? And you must ensure you stick with a very structured sell plan like I've explained here, because if you don't, you will think the coins won't stop and you will round trip your bags time and time again. Don't forget as well, there is a tax component to this. So the more you sell, the more you buy and chop and change, you're going to rack up your tax bill. It's very important to keep that in mind, of course. But the way I look at it is profit's a profit. If you've made a bunch of profits, it's better you do that and pay a bit more tax and make less profit and pay less tax, because net overall, you will make more money. Thank you all for making it this far. I applaud you. If you have made it this far, you can support the hard work that goes into these videos with a like down below. I sincerely appreciate that. Take good care.